So I think we shall get started. Yeah. So hello everybody. Good evening from Idec. Welcome to webinar discussion: the effects of household over-indebtedness in the corona-driven recession. I really appreciate you all being here, and my name is Fiona Armintasari. I am the researcher at the PRAKARSA, a Jakarta-based think tank organization that focuses on fiscal, social, and sustainable development policies. Back in 2014, we initiated Koalisi Responsi Bank Indonesia, which is a national coalition that consists of 10 national CSOs as a part of Fair Finance Guide International Network. Responsi Bank conduct research and advocacy that aims to promote sustainable finance as well as encouraging responsible lending practice by financial institution. So just to bring up the conversation a little bit, I just want to throw out some quick thoughts. So it is very clear to us that COVID-19 has hit the economy, the global economy into recession. So with the household debt already at a high record, massive job losses and reduced working hours in the form of lockdown, such as reduced working hours in the form of lockdown, social physical distancing, raises concern on household solvency. It is also commonly argued that countries with high level of household debt accumulation will have to experience a more severe recession. So today, we will discuss about the impact of COVID-19 for over-indebted households, how over-indebtedness will potentially affect the corona-fueled recession, and what measures should be taken by developing countries to lessen the impact of COVID-19 on over-indebted households. So before we get right into the main discussions, here are some of the rules and how the hours is going to work. So the Q&A session will be held at the end of the presentation, where the audience have to use the raise hand feature beforehand. The audience can unmute themselves during the Q&A session, and for those who are not presenting, please mute yourselves. This presentation is going to last for about an hour, where each speaker is allowed to present in about 15 minutes. There will be half an hour of Q&A session at the end of the presentation. And for those who have not registered, please drop your name, organization, and email on the chat room so that I can send you the materials after the discussion. First, I would like to introduce our respectable guest speakers, Octaviano Canuto. Octaviano is a well-respected researcher, thought leader, and published author in economics, experience of managing knowledge networks, and providing strategic advice to senior management of multilateral institutions such as the World Bank Group, IMF, and Inter-American Development Bank. And he is now the principal at Center for Macroeconomics and Development and non-resident senior fellow in the Global Economy and Development Program at the Brookings Institution. And second, Gustavo Machado de Mello, pardon if I spell it wrong. Gustavo is a researcher at Idec, the Brazilian Institute of Consumer Defense, with focus on activities of the Fair Finance Guide Brazil. And his core issues are ESG, environmental global governance, human mobility, and human rights. And our last guest speaker is Nurul Aidha. Nurul is now a research and knowledge manager of the PRAKARSA, and she has previously worked at International Finance Corporation, the World Bank Group, Oryx Finance Indonesia, and Research Center at the University of Nottingham, Malaysia campus. So without further ado, I will let our first guest speaker, Nurul Aidha, to present on the risk of household over-indebtedness in the context of Indonesia. Nurul, you may start your presentation.
Okay, thank you very much, Fiona. Hold on, let me share my screen first to all of you. So I think all of you can see the screen, right? Hopefully. Hold on. Yeah. Is it visible? Yeah. Okay. So before we start, actually, just a little information of what I'm going to present is first, I'm going to highlight on our research. This research is conducted together with our responsive bank partner, Indonesia. And also, I'm going to highlight the risks of household over-indebtedness in the recession era during the corona, of course. Just a quick facts on our research. The topic is basically the profile and risks of household over-indebtedness, and it started in 2019. And it's a qualitative research in the form of case study, and we have 20 samples, including credit card consumers and peer-to-peer lending borrowers. So in addition to this, we have also interviewed banks. There are 2 banks that we interviewed, and also financial institution and financial service authority in Indonesia, and also peer-to-peer lending platform. There are some of them that we have interviewed, the legal one. And we actually mostly conduct in-depth interview as instruments, and we also did analysis that we adopt from a research they conducted from Alessio and Lazy in 2013. It's actually a study on over-indebtedness in Italy. So we are adopting this research in analyzing which household fall under the over-indebtedness category. And of course, there are limitations in this research. First, we have to use the debt to income analysis, but we couldn't use the debt to service ratio because the data that we have is not a single data, it's a range data. So unfortunately, we need to use the debt to income analysis instead of DSR. But then the result is actually the same. And then the second thing is, unfortunately, there is still no universal definition of household over-indebtedness. So just to make things relevant, so because we use Alessio Lazy analysis in order to classify which one is over-indebted and which one is not. So we also use their definition of household over-indebtedness. I will explain this on the definition a little bit after this. So basically, there are 3 main questions that we ask in this research. First is the profile. We are looking for what type of profile over-indebtedness household in the sample, and what are the socioeconomic impacts of over-indebtedness household in the sample. And also, we would like to learn what have the government done to tackle potential risks that come from over-indebted household. And of course, this research, this case study won't reflect the situation in Indonesia because, of course, we need more data. But then at least as a trigger, it is like a glimpse, just a quick picture of what is over-indebtedness, because we think that it's an important topic that we need to pay attention because it's been overlooked for a long time. And this is some of the reason why we think that it's important to learn more on this specific topics and to conduct more research, more in-depth research on this, especially in Indonesia. First, because there is an increase, we know that there has been an increase in household debt that's supported by the growth of credit cards and technology-based loans. And also there is a rise of credit card circulation. This is based on the data of Central Bank of Indonesia. And not surprisingly, because of the technology-based loans, there are increase of the numbers of lenders and borrowers. Just few hundreds, maybe 4-3 years ago, And then now it grows to 245,000 lenders and 6 million borrowers in peer-to-peer lending, and this is growing. And we also know there is this outstanding loan increase by approximately 40%. Of course, there's a good news of this is because the financial inclusion in Indonesia has reached 76.19%. This is exceeding the target set by the presidential regulation number 82. It says the set target is 75%, so basically exceed by 1%. However, the level of financial literacy is a problem because it's only touched 38%. This is based on our financial authority services, OJK, in 2019. And this low financial literacy actually a problem because on one hand, there is this financial inclusion at the high level, but then on the other hand, we have of financial literacy. So it's like we are giving all these toys, but we don't know what to do with it or what that's all about. And of course, there's this problem, and we think that it's important to learn more about this potential risk of financial pressure that derive from over-indebted household. And during the writing of this research, of course, we think that, when this recession is going to be a problem. And then now in COVID-19, we see it's happening. So I think it's an urgent thing that needs to be discussed also. Back to the definition of household over-indebtedness. I hope that Indonesia one day could also define what is over-indebtedness in the country, because we found only 4 definition out there, first from EU, and then from Italy, from Germany, and from the UK. But then the main thing from all this definition that highlights the budget imbalances, and then that when one household experiencing over-indebtedness, that household is experiencing a hard time to pay off their debt, and also that they're in continuously are in debt. So we also see the relationship between financial literacy and household over-indebtedness. And we found out that first, the lack of financial literacy will make households to prefer loans with higher fees because they don't know about interest rate. So it will be easier for the platforms, especially the illegal ones, to trick them to choose for the higher fees. And low financial literacy can also cause someone to borrow excessively because they overestimate their ability to repay their debt. So here is the findings from our research in 2019. We found that the household that borrow from peer-to-peer lending platform experience uncontrollable debts. That means that they borrow from different platforms. So they borrow from one and then they borrow another to cover the previous one. So that's how the activity is for the peer-to-peer lending platform and the household. And so what happened is, if the number of the online borrowers that come from peer-to-peer lending platforms increasingly, it's increasingly in numbers, increasing in numbers. So there is a potential that the growing of inequality, and there will also disrupt the business cycle, and also worsening the recession. And we also found that that the over-indebted household in the sample are at productive age, 25 to 59 years old. They are employed and they are married. And most of the credit card user in the sample are becoming over-indebted because of the lifestyle. They try to pay for their vacation, they try to pay for their shopping spree, etc. But then peer-to-peer lending borrowers, most of them becoming over-indebted because they need to pay basic needs and to repay other debts. And we also see the regulation on peer-to-peer lending are still relaxed, especially in the efforts of hunting and shutting down illegal lending platform. Because once being shutting down, because there are, of course, many of them are being shutting down by the Financial Service Authority. But at the same time, once they get shut down, they can actually make another one with a different IP. So I think there are many things that need to be done in order to regulate them. And it comes to, it actually become worrying that we also learn from the study of Bank Indonesia on vulnerability of household. This is a study from 2018. It's highlighted there. There are two things that being highlighted in the study. First, there is a need for cautions because vulnerability of household in Indonesia has the potential to rise to higher level and to have impact on the imbalances of financial systems. And high default risk comes from household groups with heads of household at productive age, which is the same thing that we found in our sample. This is, of course, a small sample. It doesn't reflect what happened in Indonesia, but it can be a trigger to do more research on this because this is interesting. And they came from high school education level, and they're also employed and married. So we are worried actually during this COVID-19 because of the slowing down of demand. And then we see like the production stops. I read recently from BBC, there is 1.2 million workers have been laid off or lost their jobs. And of course, we already see it to ourselves. I think it's happened not only in Indonesia, but also in other countries that business cycle already get disturbed. And recession it's probably here. Maybe no one admitted yet, but it's here, of course. Like we open the door, it's already recession there waiting for us. So I think there should be ways to tackle this, especially we know that based on our research in 2019, we believe there are more households are actually experiencing over-indebtedness, but we couldn't track it. There is no number that how many actually all in from out of Indonesian household that actually experiencing over-indebtedness. So I think we need more research, more data on this. And we did a little experiment as well just to put this into framework. This is based on the World Bank framework in 2011 regarding the interaction between shock sources and coping strategies to see like if the shocks source come from labor market, credit market, what the coping strategies. So we tried to look at this and then we kind of stuck here in two because for example, if the shock comes from the labor market and the government response probably increased budget for stimulus employment benefits program, but then for households to respond based on the World Bank framework, the coping strategy look for a job. But at this moment, there is no available job. So basically, if we look at the situation of over-indebted household, then they are currently in a very severe situation, but we don't know who they are yet because we only know like a small number of them, but we believe there are many of them because especially in the increased number of the online platforms. And so if we look at the slope, this is a slope that I got from the this is the curve that I got from the Center for Economic Policy Research, EPR. At this moment, we have this containment policies in Indonesia, just applied about a couple of days ago on the 10th of April. And so if we look at this, of course, the new cases with containment policy will flatten out. So it's good for in terms of health, in terms of the number of cases. So, but then when it comes to recession, it will get worse if the containment policy applies. So at this moment, the containment policy already applied. So it will get worse because the household itself will get worse the recession. And now we have the containment policy. and it will also, make it the situation for the household even worse. So in order to, hold on, let me annotate this. In order for this recession curve not falling into a severe recession, then I think it should be a macroeconomic policy here, just to help with the situation. So we did look at the government's efforts in order to recover the economy. So we see some good programs. We appreciate that there's already a program over there, and then including debt restructuring, unemployment benefits, card tax relief, and also credit relaxation, especially for SMEs. But then also there are some comments, and we try to recommend some extension, especially for debt restructuring, because this is only debt that comes from the banks, but doesn't touch the peer-to-peer lending borrowers, because they basically don't know anything about debt restructuring. They don't know anything about interest rate. I think the government should try to extend the policy of household debt restructuring and payment adjustment to peer-to-peer lending and other fintech lending products as well. For example, by allowing grace period for debt repayment by at least 6 months, because honestly, after this recession or after COVID-19, the business won't just get up and start the production again. They will take time for about 1 or 2 months, or maybe 2 to 3 months. So debt restructuring for this household is important, because they still need help because of the income loss that they experience. And when it comes to unemployment benefits card, the government now have dedicated 10 trillion rupiah, approximately 700 million USD, and each registered workers will receive 1 million rupiah per month until the next 3 to 4 months. But again, now they're still sorting. One of my students actually lost his job and then registering for this unemployment card. And it says that it have to wait. After you register, then you need to wait because the government needs to sorting, which just makes sense in order to get valid data. So I think while waiting for this, I think the government should also right away give a fast move, also fast regulation, such as automatic cash transfer to qualified household. But of course, yeah, I understand, because the data of the household who experience over-in-debt are not available yet. So it will be difficult, of course, to find out who they are. And when it comes to tax relief, currently the government also has regulated 8.6 trillion rupiah, approximately about 600 million USD, to cover the individual income tax, but only for manufacturing sector workers. But the fact that only 10%, approximately 10% of the total of Indonesian workers are in the manufacturing sector, it raises another questions, like whether this program is effective, because 90% of us also suffer. And when it comes to credit relaxation, for SMEs specifically, the government also give about 700, it's about give a credit relaxation program for SMEs with credit limit below 10 million rupiah, approximately about 700 USD. But this is not include the women business groups, because their scale of production is actually below the SMEs. So we actually did a research in Eastern Indonesia on women business groups, and most of them rely heavily on the loan shark. So actually this is dangerous, because especially in this kind of situation, the easiest way is to borrow from loan shark, and then now it gets easier because the loan sharks are virtual. So it's just different environment, but there are some platform who are illegal and then charge customers on daily basis at high interest rates on daily basis. So, sorry. So, of course, there are still remaining questions. What are the effective way to prevent the growing number of new over-indebted households? Because now, beside the over-indebted household, the number is unknown to us, there will be additional over-indebted household due to the crisis driven by COVID. And also like how we're going to save over-indebted household in order to save the economy. I think once we save this household, we also save the economy at the same time from a severe recession. That will be the end of my presentation, and I'll give the floor back to Madam Moderator. Thank you.
Thank you so much, Nurul, for your good presentation. So as you have already mentioned before that the household over-indebtedness in Indonesia is caused by the growing number of peer-to-peer lending. I think it's also the similar case in Brazil with the minimum financial literacy to be main reason for over-indebtedness. And it seems that the issues regarding the over-indebtedness is still very much overlooked in Indonesia. So there should be more research conducted on these issues. And government also have to take the economic measures to protect the over-indebted households, since the growing household debt will increase the country's vulnerability towards the recession. So next, I think it's Gustavo's turn, and he will explain the impact of COVID-19 on over-indebted households and talk about the measures the Brazilian government take to minimize the impact of COVID-19 on over-indebted households. I think I will let Gustavo to start his presentation.
Thank you, Fiona. Well, I will be sharing PowerPoint presentation for everyone. Well, first of all, thank you for PRAKARSA for this invitation. This is a very important debate right now, though it hasn't been, as you said, it has been overlooked. And within COVID, this will be even more important. Well, my name is Gustavo, and I will be talking about the Brazilian case. I'm from an organization named Idec, that is the Brazilian Institute for Consumer Defense. We are an independent NGO. We are independent from company, government, and political parties, and we are maintained by associate contributions. So we are association of consumers. We have worked with many themes on the consumer protection. For example, financial services, that is the program that I am working with, but also with health insurance, sustainable and health, food, energy, urban mobility, and telecommunications. Well, our director is also watching us. It's Teresa, and the coordinator of the program of financial services is also attending this meeting. So they will be helping me later on with the questions too. We have been leading the Fair Finance Guide in Brazil for almost 10 years. Right now, we are composed by 4 organizations of the civil society in Brazil. These organizations are working on human rights, on consumer rights, and also on public security. And our main theme has been over-indebtedness. Well, before I talk about what's going on right now with the coronavirus, I have to give you some background on what was over-indebtedness before the coronavirus. We have a very huge new number of indebted people. We have 63 million indebted people. Half of this number is people that are over-indebted. As Nurul pointed out, we don't have a universal definition of what is over-indebtedness. So what we consider should be is that people over-indebted, they are unable to pay their debts. So having 30 million families on this situation means that almost every family in Brazil has at least one bill defaulted. So we are really locked on indebtedness for the last years. And since 2014, we have also faced economic turmoil in Brazil due to some political issues. And right now we have almost 14 million people unemployed. So this is also worsening the situation of indebtedness in the country. If you want to, we have done a documentary about over-indebtedness in Brazil. It's named No Caminho do Super-endividamento. And there are subtitles available in English. So if you are interested, please go on YouTube and look for it, or in the link I am showing here. Now coming to coronavirus in Brazil. It has first appeared less than 3 months ago, and the numbers have raised really, really fast. And now we have more than 22,000 cases and more than 1,300 deaths. So this is really a big health problem that has its effects on the economics too. And most cities now are locked down. And this is the background that you have to consider to understand the economic consequences that I am talking next. Since March, Idec has monitored the policies in reaction to the virus, in addition to creating a page on our website where we provide information to consumers on how to deal with their consumption and during the coronavirus outbreak. Well, now I'm coming to governmental responses, and when I come to this, it's important that you consider that over-indebtedness in Brazil comes from a mixture of lack of financial education and bad bank practices. There is also, as in Indonesia, the role of financial technology companies, like these technology-based companies lending money, but this is not as important as in Indonesia. But credit cards, overdrafts, and renegotiation of debts are the main sources of indebtedness for Brazilians. So this is the background to which we have to see these governmental responses. The first and the second ones are the most important for us when looking into indebtedness. For the households, the government has provided a support of 600 reais for 2 months, and the male householders can receive twice this amount. For the government, this means 98 billions of additional expenditure. However, this money is only for the basic needs because this is the money for the family during 1 month. So people who are informally working, they are the one most affected by the coronavirus. Regarding credit, personal credit contracts have been suspended for 16 days for those who have not defaulted before. So the problem is that installments are postponed, but we don't know how it's working. So each financial institution has its own policy on this suspension. And this is only applicable to the 5 biggest banks. So there are a lot of fintechs that are not covered by this measure from the government. And so far, more than 130 billion reais have been refinanced. There were also other measures from the government, for example, providing formal workers with withdrawing funds that would be available for them later on the year. The BNDES, which is the Public Development Bank, will grant much money on companies, including SMEs, to emergency credits. Many taxes, as in Indonesia, were withdrawn for some sectors, and 40 billion reais are now available for SMEs unable to pay their employees. So they can make a loan to pay their employers with the condition that they will not dismiss these employees in the next 2 months, but still, what is they are going to do after that? And this money is almost public money and not private one. So we from Idec have some very important and bold remarks about this. The banks, they are responsible to make this system operational. So people are going to the branches to receive their 600 reais, and these measures from the government, they are aiming to ease the social afflictions that people are going through right now. So that's very important that the regulators and our government surveil these financial institutions, that they are not using this public money to profit. This must be directed for people and to generate positive externalities. And so far, the banks have used these flows from government money to greenwash their reputations. They are making much advertising on TV, showing that they are the ones saving Brazil from the recession. That's not true, since they have done some good measures, for example, donations of materials and money to fight the virus, but the most of the contribution comes from the government, and the banks are taking the credit for themselves. And as usual, even though we had been having 63 million over-indebted people, banks were still profiting as always, and that's happening right now too. So people are completely desperate, and banks are putting a better portraying themselves as good actors in these conditions. And there is also a need for transparency, because we don't know so far how the suspension of debts are being made. Each bank has its own policy, and there is no universal policy that is set by the regulator. So there is a need from government to make it very clear which are the conditions, and also for the companies who are taking loans to pay their employees, they must be already in compliance with labor and tax legislation. Otherwise, this money wouldn't be used on the right way. And the most important of all is that public resources going to companies and banks, they must be used to protect the most vulnerable people and to generate positive externalities to society, and finding durable solutions, not only solutions in the short run. And finally, we have also asked to regulators and the ministries that interest rates for credit cards bills must be reviewed, as well as the payment of overdrafts. As I told you earlier, these are the main sources of indebtedness within the Brazilian population. So people are not going to be able to pay this soon, so there must be a revision. That's Idec's point. Well, when we go after this situation and this coronavirus outbreak, we still have many challenges, because default rates have already raised due to the crisis. Our GDP is likely to drop 5% according to World Bank. The SMEs, which are responsible for most of jobs generated in Brazil, will be the ones more affected. And even though they have loans right now, they are only prohibited to dismiss people in 2 months. So what's going on after these 2 months if we do not recover the economy? And imported goods may also be more expensive, and this will put even more pressure for consumers themselves. And in this plot, it's very likely that indebtedness is going to deepen even more. So the number that was already very high, 63 million indebted people and 30 million over-indebted, this can reach unprecedented levels. And what I would like to highlight is how important these people that are now indebted are important for the economy. Because if people don't have money for consumption, companies will not have money for hiring new employees. So it's likely that more indebtedness, it will generate more unemployment, because less money on consumption will make also companies indebted. And so if companies are indebted, they will dismiss their employees. And so we have a snowball in Brazil in which over-indebtedness hampers any development on economic recovery right now. So even though there are some measures for the short term, the scenario may be worse, because we will have a very big part of the population indebted and unable to put money on the economy. And so what we plead to policymakers is to develop policies and approve laws that provide long-term solutions to the over-indebtedness problem. This is not a new issue in Brazil, but it has been overlooked as in Indonesia, and though many organizations have been discussing about it. We have right now a draft bill in our Congress that is 3515. This is a great beginning for solving the problem. The policymakers, they have the chance to approve this bill and solve part of the problem of the indebted people. And this means for the banks that they have to be more responsible. They have to take their responsibility, because they are the only ones benefiting from this. Right now, if the families will receive 98 billion reais from government, banks are receiving 1.2 trillion reais. So this is much money for them, and they have used it on a responsible manner. And for the months to come, they have to be even more responsible in advertising, because right now they are advertising to people taking new credits when they are unable to pay in the next month. So there is a lack of responsibility right now. And finally, that's very important, that this money is to save the people who are in need and not to generate profit from the banks themselves and for companies that are using this through loans. Well, this was my point, and Idec is monitoring every move that the government and banks and companies are making. So they must be very responsible and accountable in this moment. And I'm waiting for our questions later on. Thank you for this. And let's hear Octaviano right now.
Okay, thank you very much, Gustavo, for your presentation. As you have already mentioned that in Brazil, although the definition of over-indebtedness is very wide and there is no common or universal definition, but in Brazil itself, over-indebtedness is defined as the inability to repay the debt. And it seems that the confirmed cases in Brazil is about 4 times higher than it is in Indonesia. But we are unsure of whether our data is true or not, since the government here in Indonesia is very much lack in transparency. Well, the reasons for household over-indebtedness is the same in Brazil, which is lack of financial education, as well as bad financial institution practice, such as predatory lending, those who are charging excessively high rates. So the banks have a central role in here to minimize the risk of over-indebtedness by promoting more transparency. in tackling the shocks, the government has took some measures such as credit relaxation and tax withdrawal on goods and services that help to fight against the COVID. However, it is regarded insufficient because it only focuses on fulfilling the basic livelihoods of the household itself. So more indebtedness means lack money from consumption. That also could mean less jobs available. So further policy measures should be taken that provide more durable solutions for this type of households. I think I will let Octav to provide us more of a broader sense or a broader overview on this topic. Is there actually any link between recession and household over-indebtedness? Will household over-indebtedness actually exacerbates the impact of recession? I will give the floor to Octav. Octav, you may start your presentation.
Right. But first of all, thank you really very much for having me here. I have a double pleasure, not only for having this interaction, but also from the fact that the research, the methodological benchmark referred to by Nurul was developed by one of the departments of the Vice Presidency for Poverty Reduction and Economic Management, where I was the one in charge. So it's really a pleasure to see how it's bearing fruits, and very well done. And I will have some comments on that afterwards. But let me just try to broaden a little bit the picture to, let's say, how it is that the coronavirus catastrophe is playing out in most developing countries. It is a catastrophe, particularly for developing countries, because of the following. Each developing country is being obliged to cope with the challenges of flattening the coronavirus curves that Nurul quite well depicted in her presentation. Not only the infection curve, the pandemic curve, because one needs to let's say to slow the pace of contagion so as not to create a conflict with the limited healthcare capacity, but also as well the recession, to mitigate the recession curve, because by itself the policies, the healthcare policies, tend to have an impact on the economic activity, the social distancing, even in the way that it has been implemented in countries like Singapore and Korea. They also have some impact on the economic activity. So it matters a lot what the government does, the public sector does, to mitigate the recession curve as well. Look, as a catastrophe, the coronavirus calls on the only economic agent capable of providing some insurance, which is the state and the public sector. That's why all over the world, there's going to be a tilt upward on public debt, because the only agent capable of providing some sheltering to the population is the public sector. Which are the ways by which the public sector has been called on to provide this role? First of all, of course, to provide income to those mostly affected by the paralysis of economic activity, be it through income transfers. I know this is an issue that is not always up the agenda in Asian countries, but it's something that it's quite important to highlight. Like it has happened in the US, where I live, with direct income transfers to the personal account of many Americans. The other typical measure to mitigate the recession curve is by providing guarantees so as to make sure that small and medium enterprises or more vulnerable companies, which would be healthy or feasible under normal conditions, they suddenly face the risk of bankruptcy because of the revenues vanishing from night to day. So with different forms, we have seen this kind of government-supported, government-subsidized credit to companies. By the way, as Gustavo aptly said, this is not something that we can leave in the hands of the private sector, because banks will operate like banks. And given that obviously risks are higher in our economies, the banks tend to charge the logic of market economy tends to lead the financial intermediaries to raise the interest rates. So one has to have government guaranteed lending so as to make feasible the survival of those firms. And also a third usual component is some sort of a tax relief and enforcement of debt standstill policies. Now, my point is that if this is something hard and costly in advanced economies, look at the case of the developing countries. I have the impression that maybe, maybe that comes better. Look at the situation in terms of public health capacity in developing countries. Let me try, it's hidden here behind the figures, but what I can tell you is the following. There's a huge discrepancy in hospital per 1,000 people, according to the income level of the country. This is the classification of what the countries by the World Bank, ranging from low-income countries, lower middle-income countries, upper middle-income countries, and high-income countries. And the difference in terms of healthcare capacity as measured by hospital beds per 1,000 people is humongous among these countries. The same applies to, for instance, the kind of equipment like the ventilators that are necessary to treat the coronavirus case of patients with acute respiratory infections. And there we go. The public health conditions are much worse in developing countries, less bad in lower and upper middle income countries, but it's still different from advanced economies, which makes that challenge of flattening the infection curve even more important. Not only that, look at this. This is the estimates of the informal labor as share of employment in all countries in the world. And while in upper middle income countries, this share is close to 50%, in the case of low income countries, it's 92%, almost 93%, which makes everything more difficult because informal labor doesn't have unemployment insurance, doesn't have the possibility of a paid leave, and everything that comes with formalization in the labor market. So, which makes the relevance of direct income transfers from the public sector to the people even more important. But the informality doesn't help. One thing that one must highlight in the case of Brazil is that the existence of a cadastre, a registry that was created at the time of the conditional cash transfers creation in Brazil has made possible to establish a platform for distributing some money, little money anyway, should be higher than what it has been, but at least for 3 months, there has been the possibility by the federal government in Brazil to transfer money straight, directly to households, encompassing not only the recipients of conditional cash transfers, but also with a last-minute effort to broaden the registry also to other people in the country. But the fact is that informality of labor is a huge challenge, including for everything that we are discussing about. A third aspect of the difficulties facing the coronavirus catastrophe in developing countries is obviously the lack of fiscal space. When one looks at the general government gross debt as a percentage of GDP, there's not much difference here among these countries. But the fact is that developing countries face higher risks in terms of currency mismatch, face higher risks in terms of maturity and so on. And ultimately, developing countries have proportionately less fiscal space to implement these packages. But it has to be done. And that's why it is important that the international community helps, particularly the low-income country levels, low-income countries in the near future, how to cope with the inevitable increase in the indebtedness. Okay, not enough for the difficulties of developing countries to manage to bend their curves of infection and recession, and there is more. The coronavirus has meant a perfect storm to developing countries in the sense that even before coronavirus landed at them, starting their its own local process of contamination, these countries were already suffering the big impact, large shocks coming from those areas where coronavirus was already spreading. Think of the impact of the downfall of tourism on Indonesia, or in Thailand, or in Kenya, in Africa, or in many other places in the world that are very much dependent on tourism. Also, think of the remittance, remittance are so important in the case of some countries. There are countries, the countries with which I worked in the past, Dominican Republic, Haiti, Guyana, thinking of the countries in our region. The share of remittance to GDP in this case is humongous. And of course, as the coronavirus spread in Europe, France, Italy, and in the US, many migrants have lost their jobs. People who work at hotels that were chefs in restaurants or drivers and so on. So they cease to send money to their mother countries. Not enough. We also have seen a downfall in commodity price. Oh, this is just a chart to show the difficulties, the additional difficulties faced by countries that have many people living in slums. The social distancing policies are hard to implement under those conditions. Now, as I said, is a perfect storm because on top of the challenges associated with coronavirus itself in each country, developing countries has also been facing a decline in commodity price. This is important for Indonesia, for Brazil, and for many developing countries. The commodity price decline means less government revenues, means less income in all these countries. And to complement the tragic picture, there has been a humongous capital outflow from developing countries. This chart only includes emerging markets, that is to say, most lower middle income countries and upper middle income countries. But the same phenomena has taken place as well in the case of frontier markets and of low-income countries that have relied on some external finance in the recent past. According to the estimates of the Institute for International Finance, $100 billion have been taken out just in March out of emerging markets. And of course, in all those cases of developing countries that, let's say, need external finance, this has become a major difficulty to face. Now, let me make a couple of comments based on the quite important and interesting two presentations by Nurul and Gustavo. Well, first of all, Gustavo's reference to greenwashing reputations by financial intermediaries and to the fact that we cannot rely simply on good behavior of financial intermediaries. This highlights the relevance of having direct income transfers directly to the poor people. This has to be, this is the embryo for possibly minimum income policies in the future in many developing countries. That's the bright side of the tragedy that we're living through. Second point that I would like to make, what Nurul described in the case of Indonesia remind me a lot of a couple of works that we did at the time back in 2005, 2015, and I was still at the World Bank. No, at the time I was at the IMF. We and a couple of colleagues did a study on China. We saw similar problems in China with the peer-to-peer lending platforms leading to over-indebtedness until the government intervened and established some regulatory limits. So probably it's we are facing a learning process and Indonesia as well. There is a good side of peer-to-peer lending. There is the good side of financial inclusion made possible with the technological change. But what is that happening in other financial sectors, we must have some sort of regulation. And we cannot leave it go freely because otherwise it tends to lead to issues like this. The structure of the policy package in Indonesia sounds like very much the one in other developing countries. I noticed that it included debt restructuring, unemployment benefits card, tax relief, and credit relaxation for small and medium enterprise. Quite in tune with the itemization of this kind of policies in other countries, developed and developing countries. But I'd like to ask Nurul to tell me a bit whether how, if it matters, informal labor is a challenge for these kind of support to labor in Indonesia or not. Educate us on this, because as you saw in the figures, in the chart in the table that I presented, this is a huge problem. It is a problem in Brazil. 30 million. Gustavo can correct me with the right figure, but suddenly the government had to, in Brazil, had to do an extra effort, and it's still ongoing, and it's hard, it's difficult, it's problematic. Many people have been left sidelined because they were not registered and so on. One must have a special effort to incorporate informal labor. And this is a huge problem. Think of African countries. And the relevance is, the worst scenario is when governments implement containment policies like mandatory social distancing without having the complementary package of flattening the recession curve for the poor country. We saw how it is happening, for instance, in Nigeria. Nigeria has decided, the government decided to establish a very strong containment measures, radical with police and so on, but without accompanying it with income transfers to the people, the poor people. This is obviously, people will not stay at home to die of hunger, right? So it's nonsense. One has to have both. We will have to have the flattening of the pandemic curve and the flattening of the recession with focused income transfers and support to small and medium enterprise in order to make feasible the contention of the infection curve. I found extremely important the point made by Nurul with respect to women business groups. One of the departments under my vice presidency, when I was vice president, and I did many, several works. I published a lot of things, and I did a lot of research on the relevance of gender equality for economic growth. Gender equality matters not only as itself, as a sustainable development goal, but also because gender equality is important, is good for economic growth for several reasons. And it's important that Nurul has called attention to the fact that women business groups cannot be left outside of this. They have to be included. So overall, it's a catastrophe, a global catastrophe. The global footprint of coronavirus is something that cannot be, now it's clear. It is bringing the domestic challenge with recession and with contention of the infection pace, but it has also brought shocks to the developing countries on top of those challenges. And we need to think the package definitely should include packages, a way to help indebted households to cope, to solve their dependence, particularly because we are already in a global recession. No one will escape. And we must start thinking on what should be done to avoid that the global recession does not become a global stagnation, which means finding some ways to help households to cope with their over-indebtedness. Thank you.
Thank you very much, Ota, for your very good presentation. So as you have already mentioned before, that developing countries are facing the trade-offs with the trade-off situation between minimizing the impact of recession while preserving the economy. And the common measures taken by the government in developing countries in the meantime of the crisis are providing direct income transfers to households, credit guarantee for SMEs and vulnerable companies. One of the challenges faced by the developing countries are inadequate healthcare facility, which makes it difficult for us developing countries to flatten the curve. The high number of where they have less fiscal space to implement economic stimulus package due to decreased commodity price and capital outflow. And then you also mentioned that although financial innovations helps to increase the financial inclusion by serving the unbankable, there is still need regulations to minimize the negative impact. After this,